Welcome to Coin Pulse, your go-to channel for everything money. From crypto insights and stock trends to the jaw-dropping financial stories of the rich and famous. Stay informed, stay successful, let's talk money. In a time when economic uncertainties and rising prices dominate the headlines, the American retail sector stands out for its surprising resilience. The U.S. consumers' love for shopping remains unshaken, yet their behavior has evolved. A new generation of conscious consumers is spending more deliberately and redefining how they value quality. This shift presents exciting opportunities not only for savvy retailers, but also for investors looking to capitalize on emerging trends. Why retail in the U.S. continues to thrive, and where to invest. They buy and buy and buy. Americans are not giving up their love for shopping. Not even significantly higher prices deter them from maxing out their credit cards. However, there's a new awareness emerging. U.S. consumers are spending their money more deliberately. Shopping consciously often means cooking at home instead of dining out, but doing so with premium ingredients. It also involves opting for store brands for basic staples like flour, sugar, or salt, but splurging on high-quality olive oil for $20, or purchasing designer clothes at substantial discounts. Retailers that understand this shift in consumer behavior, like Walmart, Costco, and TJX, are thriving on the stock market as they adapt successfully to these trends. Do not bet against the U.S. consumer, advises Claudio Irigoyen from Bank of America. According to the Bank of America economist, the U.S. economy shows little sign of slowing down despite higher interest rates, reduced hiring, and declining government benefits. The resilience of consumers is the reason, he explains. Real incomes, even after accounting for inflation, have risen significantly, and household finances are robust. We expect real income growth to continue in the coming years, driven by steady job growth and wage inflation that outpaces other price increases, predicts Irigoyen. Low sentiment, high spending. By the end of 2024, consumers were more optimistic about the U.S. economy than they had been all year. However, sentiment remains worse than before the pandemic. More than half of respondents recently expressed indecision or pessimism about the economic situation, notes Ezra Greenberg in a McKinsey study. Still, there's a noticeable shift. In past decades, lower consumer confidence typically resulted in declining retail sales. That has changed in recent years. Consumer confidence plummeted with high inflation rates and hasn't truly recovered. But this hasn't affected spending, explains the expert. Consumers are spending more money than before the pandemic, and expenditures continue to rise yearly, McKinsey concludes. The sentiment simply doesn't reflect this. Americans don't realize how well off they are, says McKinsey expert Greenberg. A new era of conscious consumption, McKinsey experts describe this as a new chapter in consumer behavior, the conscious consumer focusing on value-oriented shopping. Today's consumers optimize their purchases. They spend money on what they perceive as offering the most value and assess the worth of their purchases differently than before, explains Greenberg. They don't just chase the lowest prices, but spend carefully or lavishly depending on the category. Despite a lack of confidence and concerns over high inflation rates, they have enough disposable income, and when they're convinced something is worthwhile, they'll spend freely, she asserts. Price sensitivity and grocery trends. Particularly in the grocery segment, consumers have become more price conscious. Although inflation rates have eased, food prices have risen over the past 4 years, analyzes Matt O'Grady from dunnhumby, a U.S.-based retail consultancy. Consumers now buy less per trip and visit multiple stores to find bargains, trying to offset the impact of higher prices, O'Grady notes. Budget brands and premium home cooking. McKinsey highlights several areas showcasing this new consumption behavior. Shoppers save on low-value items like sugar, flour, and oats by opting for store brands from major supermarket chains. Yet overall, U.S. consumers aren't spending less on groceries. They purchase store brands and shop at discount stores while also buying higher quality, sometimes semi-prepared ingredients for home cooking. Americans are cooking at home more frequently and eating out less, boosting supermarket sales. Investing in the retail boom. Participating in the consumer boom has become trickier for investors in recent years. Stocks of major retailers like Walmart and Costco have performed exceptionally well. However, alongside online retailers, the pool of investable options has shrunk. Major department stores like Saks Fifth Avenue, J.C. Penney, or Sears are no longer listed, and others are struggling. The relatively new business model of TJX, known for its TK Maxx stores in Europe, offers an attractive investment opportunity outside the major chains. The U.S. retail sector is not just a reflection of the country's economic strength, but also a testament to the creativity and adaptability of its players. Whether it's the success stories of Walmart and Costco or the innovative model of TJX, investors have a chance to benefit from the rise of conscious consumption. As shopping habits continue to evolve, one thing remains clear: Americans won't lose their love for shopping. Those who understand these changes can find success not just in the shopping cart, but also in the stock market. If you enjoyed the video, give it a like, subscribe to the channel, and hit the bell so you never miss a trend. Stay informed, stay successful. See you soon.